Good morning and welcome to the Gold Trading Experts review of April 2017. We ended this month slightly down with a loss of 45 points across the 5 trades that we executed. We had 2 winners this month, although in reality those 2 winners were one of the same trade, which we closed over the Easter period and reopened later on, which we'll come on to later in this video. As mentioned in our email updates this month, we've now also gone live with our long trading strategy, and so from this point forward you can expect to see some long trades from us as well as our usual short ones. So let's start as always with a review of where we're at this month. We'll start with the monthly chart. You'll all be aware that things on the geopolitical front look pretty concerning at the moment, North Korea being the crisis du jour, but also the impact that Trump has on the markets every time he tweets. We are starting to wonder whether or not there's some market manipulation going on there, because he must know the impacts of his tweets and what that will do to the gold market. But anyhow, we have to just trade around that. So you can see here on the monthly chart that the statements over the Easter weekend pushed price through the top of this long-term downtrend channel. It was capped by the 23.6 Fib retracement level from the 1046 to 1375 rally, but since then price has weakened to form this sort of shooting star type candle that's closed below the 61.8 Fib retracement level of the late 2016 corrections. This correction here, the 61.8 Fib retracement level here, price closing below that is significant. It means it's tested and failed to get through that level for now. So here on the monthly chart we can see that we could easily retest this area here of the long-term downtrend channel through May and June. There is strong resistance above that and strong support below it, and we'll shortly be entering the quieter summer months. So what we may see through that period is a sort of sideways downwards trading action as we move towards the apex of this triangle. But one thing is for sure, and that's that this triangle concludes around November this year, and so that will dictate the longer term direction of gold. And so here on the weekly chart you can see how that indecision at the moment is further highlighted. We've got price jumping up here over the Easter weekend, where it closed at 1287.5 only to open at 1291.8 after the North Korea tensions. And then the following week we've got this big gap here where price gapped down over the weekend, closing at 1284.3 only to open at 1273.2. So quite a big gap down after the initial round of French elections, coupled with a Trump tweet about tax reforms that he released over the weekend. And in both cases over these weekends we closed out our trades before the market closed, knowing that there is a likelihood of price gapping when there are sort of major things on the horizon, or longer bank holiday weekends, public holidays like Christmas and Easter. So we tend to close out before the markets close there to give ourselves some protection, and this highlights why. And so moving on to the daily chart, we can see more clearly the areas of support and resistance formed by these fib levels. These will have a big impact on price movement if price does trade sideways stroke downwards towards the apex of this triangle. It's worth noting also that above the strong resistance here of this 23.6 Fib retracement level and the long-term downtrend channel, there really isn't much in the way of resistance other than these previous highs here around 1337, 1350. And so if we do get a confirmed break through this downtrend channel and above this 23.6 Fib retracement level, we could expect price to move quite quickly towards those areas of resistance. It's also worth noticing how the 50-day and 200-day moving averages are converging here. If we get a crossover here, it's an indication that price is likely to keep going in the direction of that crossover for some time yet. If we have a quick look at previous times where that's crossed over here in November 2016, we can see that price was falling, but after that crossover continued to fall considerably for some time afterwards. And similarly, back here in February 2016, where the 50-day moving average crossed through the 200-day moving average, again it done so on the back of some price gains, but from that point that it crosses over, it continued to make significant gains thereafter. So if we do get a crossover here, it could well be an indication that the price is going to move higher up into this area here of 1350, 1375 to take on the previous highs. So that's it in terms of where we think the market's likely to go, what's happened in the month. So now let's take a look through the trades that we made this month. So our first trade was at 22.35 on the 5th of April, short at 12.55 with our stop at 12.59.5 and a target of 12.41.1. On the 15-minute chart here we can see how price had earlier tumbled, looking pretty weak, but finding strong support around 12.45, rebounding back towards the 23.6 fib retracement of this move here, with price entering the overbought zone of RSI at 22.15. And if we look here on the 5-minute chart, you can see now that price was clearly in the RSI overbought zone just ahead of when we entered that trade, and also below this previous high, which was below this previous high here. So our system is looking for tops to form. It tries to preempt the top so that we can put a nice tight stop in, which we did so on this one here at 12.59.5, and everything was looking really good for us for a while on this one. We've got clear bearish RSI divergence formed here as this top is forming, price rolling over, moving nicely towards our target over the next day or so, before in the middle of the night on the 7th, or the middle of the morning on the 7th, the US launched a missile strike in the middle of the night on Syria, which understandably caused gold to shoot higher. Clearly this wasn't something anyone could have foreseen. Downright unfortunate for us, as the trade looked really solid until that point. So our second trade was at 16.46 on the 11th of April, short at 12.66.6 with our stop at 12.70 and a target of 12.55.2. On the 4-hour chart here, you can see how there's been bearish RSI divergence, price making higher highs, RSI making lower highs through the back end of March, and price has taken a bit of a tumble here, only to find support off of these key fib retracement levels that we discussed right at the start of this video. And price has started to move higher. We've got this high here from this shooting star type candle at 1271.1, and our assumption was that if this was the start of a long overdue correction, it would be reasonable to assume that whilst price did rebound off of these levels, it wouldn't go higher than this level. It would make a lower high and fall away. And so a quick look here on the 15-minute chart shows that these were the previous highs from which price had fallen. Here are the areas where the fib levels had held out. Prices started to climb higher, and although it climbed higher than the 23.6 fib level, what we can also see here is that price had moved into the overbought zone on the RSI indicator, and so if these highs were in fact the top, we should then start to see price roll over and fall away. And here on the 5-minute chart we can see what triggered the trade, where we can see price has closed here above the 23.6 fib retracement level, but in doing so has started bearish RSI divergence, where the previous candles made a higher RSI high, but price has made a higher price high, and that is a good indicator of a fall starting. Going back to all the previous points as to us assuming that the top was in at 1271 and this was a retest of that and a fall away. Our stop went in at 1270 with a target of 1255, which was above the areas of support here that price had previously encountered, so it looked like a good trade, but we were only in it for a few minutes as price did in fact continue to climb quite quickly higher and take us out of the trade very quickly. Trade number 3 followed shortly afterwards at 1857 on the 11th of April, a positional short that we took at 1271.5 with a wider stop up here at 1281.7 and a target of 1249 down here where these key areas of support, the fib levels, exist. And this trade was taken off of the 4-hour chart where we have this long-term RSI divergence we discussed in the previous trade in place still. Price continuing to make higher highs as it beat the previous high here in our last trade, taking us out. RSI continued to make lower highs, so that was one of the key factors that made us consider this trade. The next was the proximity of price to this 61.8 fib retracement level, key area of resistance, and then how close that was in turn to this top of this downtrend line. We felt that price may get rejected from this level, not try and test the downtrend line here and move back down into this sort of area. We would have probably considered our options as price got close to this area, maybe adding a trailing stop to see price down on its way back towards the lower 1200s. That didn't happen, although it did look good for a little while. We did get that test and rejection off of the 61.8 fib level, but as time moved on through the lead up to the Easter period, North Korean tensions escalated, Trump started issuing threats by tweet. Markets reacted as they have done previously to Trump's tweets in buying gold, safe haven, gold shot higher, and price moved on and upwards towards the downtrend channel here to have a go at that level again. So disappointing. We felt that this represented a good value trade, but it wasn't to be on that occasion. It's worth noting that this bearish RSI divergence is still active. Prices continue to make higher highs, RSIs continue to make lower highs, and that had a bearing on the winning trade that we took, which was trade number 4 and 5. Trade number 4 was at 2:58 AM on the 13th of April, the day before Good Friday. We went short at 1287.1 with our stop at 1290.4 and a target of 1271.1. We've just discussed this bearish RSI divergence on the 4-hour chart, but you can also see now that price is right up against the long-term downtrend line and also in the overbought zone on RSI. Here on the hourly chart you can see that the 1 AM candle on the 13th finished with a very indecisive doji candle, very close to the top of the downtrend channel. The price has been in for some time, and on the 15-minute chart we can see here that there is more bearish RSI divergence and price action really narrowing and price looking like it's rolling over and starting to form a top at this level. So we entered in the early hours of the 13th, but we had to exit this one with a small gain as the extended market shutdown over Easter loomed. It's always good practice to get out before those extended market shutdowns. Anything can happen and usually does over those periods, and we're glad we did on this occasion. As you can see here, price then gapped up on the reopen as North Korean tensions had escalated over the weekend, and that would have hurt us as that would have filled our stop order at least 16 points higher than we had planned, and we'd have lost more money than we'd have been happy to on that one. But as we woke up on the Monday morning, we reassessed the position and we decided to re-enter this for trade number 5. We entered this trade number 5 at 1291 at 7:43 on the morning of the Monday morning, just above the downtrend line here, but our assumption was that, as normally happens with a gap, price would move down and close that gap. So we put our stop just above the previous highs here and took a short position, with us assessing that if price did close this gap, it would bring us back down to the same area where we'd taken the previous trade, trade number 4, and those same conditions would then apply. So we set our target for 1274.1, which was slightly higher than the previous target, but we wanted to take into account the fact that price had actually pushed on through this resistance area. This trade turned out to be a good play. We made a good decision here. Price gradually moves its way down towards our target and came to within a point of our target on the 19th of April. Price seemed to be struggling then in this area, finding a lot of support in the form of this 61.8 fib retracement level, one of those key levels from the daily, weekly and monthly charts we spoke about right at the start of this video. And so we made a decision to exit this trade and take our profit at 1278.7. We're quite happy with that. We all know then that after the French elections and Trump's tweet over the following weekend, the price gapped down massively, but this is irrelevant to us because we would have closed that trade ahead of that weekend, knowing that the French elections were on, and the results of those French elections and Trump's tweet meant that there was a significant gap down in the market, but we can't really count that as something we would have gained because we would have closed out over here somewhere ahead of that. That concludes our trades for April. We look forward to a return to winning ways in May, and thank you for watching and goodbye.